Hey, what's up, everyone? I hope you're doing well. Hey, I just wanted to take a quick minute and talk to you. We have some pretty big news coming out of the Federal Reserve today. The Fed has announced they're raising interest rates by 0.25%. They've also scheduled 6 additional increases for the remainder of the year. Now, this is the first time the Fed has raised interest rates since 2018. So this is a big deal. This is a big signal from the Federal Reserve that they're pivoting from, previously their main concern was combating COVID, its impact on the economy because all of these, businesses were shut down, and that impacted the economy dramatically. So they were doing everything that they could do to soften the blow from COVID. Now, this raise in interest rates signals a pivot. So now the Fed's attention is, what can we do to combat inflation? I'm sure you've noticed if you go to the gas station to fill up your tank, prices are through the roof. My wife, she was just talking to me earlier today, and she filled up her Tahoe. It was $90 to fill up her gas tank. That's unheard of. If you look at the cost of rent, it's higher than it's ever been. Groceries. I can go on and on. We've all noticed the impact of inflation on our wallets. So what the Federal Reserve is doing is they're raising inflation rates in an effort to slow down the economy. They want to get, these prices for goods, services to come back down. We can't have these rates for gas, food, rent continue to climb up and up year over year. So that's what they're doing. Now, how does this impact commercial real estate? Well, a couple of things to consider. So at a high level, what's going to happen is it's going to cost more for buyers to borrow money. And so buyers are going to have less buying power. Whenever we underwrite property, we look at the cash flows, the expenses, a couple of different ways. And so when the cost for money goes up, the banks are going to lend less money. There's a ratio called a debt service coverage ratio that we look at when we're underwriting property and analyzing cash flows. So that's going to be directly impacted. And so in general, as interest rates go up, cap rates go up, property values come down. So what does that mean? Well, it depends on, who you are and what you want to do. If you own property and you're thinking about selling, well, this presents a great selling opportunity now. The reason I say now is interest rates are still at historical lows. Money is still relatively cheap, and buyers have more buying power now. If you're a buyer and you're thinking about buying property, well, if there's urgency and you need a place to do business, or, maybe you need to put your money somewhere now because you're doing a 1031 exchange, well, that's one thing. But if there's no urgency, if, you don't have to do something now, this potentially presents a buying opportunity later on down the road as, the cost of money goes up, and that's going to potentially impact property values, which will come down. And so the buying opportunity for later on down the road is you could buy after prices start to come down, when prices are lower. And the other thing to note is, there's a bunch of different things that impact property values. We all saw what happened when COVID hit. That had a huge impact. There's the quality of the tenant. How well capitalized is the tenant? Is what type of industry is your tenant in? We saw restaurants take a really big impact when, the government said, hey, you can't have people come into your restaurant, and, you have to shut down. So all of those things factor into the equation. More recently, there's the war in Ukraine. The geopolitical unrest, that's created a lot of volatility and uncertainty. So all these things factor into property values. We don't know what the future's gonna bring, but we can certainly make sense of the Fed raising interest rates and how that impacts property. So think about that. And then, the biggest thing to consider is, what's your plan? What's your strategy? Do you have a strategy? You know, if you want to accomplish a goal, you need to get clarity on what that goal is. And, you know, to get to that goal, you need a strategy. A strategy is, you know, a plan to help you accomplish and move towards a goal. So with real estate, you know, do you have a plan? Do you have a strategy? Do you have clarity around what your goal is? Or do you just kind of own property and you're not really sure, you know, what you're doing or where you're going? So biggest takeaway from today, you know, the Fed raising interest rates, it's definitely going to impact property values now and later. It presents a selling opportunity now, it presents a buying opportunity later. And, you know, the biggest takeaway, you need a real estate plan, you need a strategy to help accomplish your goals. So what do you guys think? You know, do you have differing views? Does this make sense? You know, what's your real estate strategy? What are your goals? Do you have clarity? Do you need help? Either way, you know, I'd love to hear from you guys, hear what you think, and you know, leave comments, call me, text me, get a hold of me, however makes sense to you. So thanks for your time. You guys have a blessed day.